Hey everybody, it's Mike from Orderflows, and I'm shooting this quick video because I want to talk about an anomaly that occurs every once in a while in the order flow, and it's something that you could look for if you use a volume footprint chart. Now, point of control, or as some people refer to it in a bar, the COT, the commitment of traders, but I use the term point of control, is the price level in the bar with the most volume. And it's the volume taken at both the bid side and the offer side for a price level. And in a footprint chart, it's usually highlighted with a sort of grayish box around that price level. Now, every bar has a point of control, okay, because obviously there's volume in every bar. And, it's sort of, depending on where it comes in the bar, does have a slight impact in how the market is going to react. Now, one of the interesting things is, point of control, since it's volume related, the most volume, when you start to have several lined up at the same price level, consecutive bars, whether it's, a time-based chart, like every, a 1 minute bar, and you start to have 2 or 3 lined up, one right after the other at the exact same level, it's telling you that that's an area where there's a lot of volume going through. And again, if you're using a volume-based chart, you're also going to see it. If you're using a tick-based chart, you're also going to see it. And what's interesting is when you have them lined up like this, right? Here's 2, 1, 2, and then the market trades away from it. It's often worth, sort of making a mark on your chart in case the market comes back to that level. It can give you a nice entry price. Okay, so you can see here the market was trading back and forth. This was around, what is that, 40.27 area. You got the 2 point of controls right at the same level. Market sold off, then started working its way back up, right up here, right to that level, rotated around there for a few minutes, and then sold off again. Now, there's 2 point of controls lined up, one right after the other, right down here, but then the market just continued to trade at that price for the next several minutes. That's not what I would like to look for. I would like to look for where the market moves away from those 2 point of controls. Another example, what is this? This is crude oil, okay? Now, let's get the crosshairs here. There were a couple point of controls right here, 1, 2 lined up. Now, what's interesting in this crude chart today is, there's 2 here. There's another one here. There's another one here. So basically, you got 3 here. That's what market-generated information is. It acts as support. But when I see, a couple of prices like this and the market rallies up, I'm always going to be looking to see if the market's going to come back down to it. And look at this. It came right back down to this 8,700 level. Again, you put in another point of control right at that level, rallied back up in that same bar, went from 87 all the way up to 87, what is that, 34, even came back down within a tick here. Or actually that is back down to 87, and then, rallied up back up again into the 8740s. Now, I wish I could say that this was, the perfect setup, that it's always going to be like that, but it's not, okay? There are times where it works beautifully like this. There's times where it doesn't. It just fails, and that's why, obviously you could put a stop in, but if you could have a level, right? Imagine that, right? You have this level that was formed right in here at 906, 907 this morning. Market rallies up, comes right back down to it, gets literally to that tick, 1 tick, 2 ticks through it, and bounces another 30 ticks. If you're just using, a 5-point stop, 5-tick stop, it can give you a nice low-risk entry. So I hope you found this useful. If you like this video, I'm hoping to make more in the future. Make sure you subscribe to my channel, hit the like button so I know you're enjoying this content, and leave a comment below. So thanks, guys, and I'll see you guys on the next video.